Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about first red day. And we're going to be talking about some different variations that have shown up this week for first red day opportunities. We'll be talking about how the news obviously can affect whether or not certain opportunities can be entered into. We had major red news. We've had some volatility on some of the major releases. But important again to understand that hindsight does pay. Having a thesis heading into the session and understanding what a best trade setup looks like and how it should set up heading into the session that you're trading, if indeed there's an opportunity in that session. So I posted this yesterday. It's some notes from Peter Brandt and Classical Charting Principles. Peter specifically addresses some of the things that I think traders need to understand. So in any given time frame, markets tend to be either in a sustained trend or in a congestion area wherein prices advance and decline but remain in a trading zone. During some periods of congestion, prices plotted on a graph can form a number of recognizable geometric configurations. In the vast, overwhelming cases, a given market will defy understanding from the standpoint of classical charting principles. Periodically, prices will form clearly identifiable geometric configurations. Depending upon the correct identification of a geometrical configuration, the direction and magnitude of an ensuing trend can be ascertained with some degree of confidence. This is the exception, meaning that we can have signal days. We can have markets that look like they're setting up and then it doesn't play out. Or we can have major red news on the calendar that prevents us from perhaps taking the entry at the timing window when we see the entry, because we could be in a volatile market, a wick, whipsaw, whatever that may be. But in terms of managing our risk, I stay out of the markets until after the news is released. So looking at the NASDAQ, we have our Monday, our day one. I'll just type this in here, Monday. And that starts our opening range. We talk about this in the playbook. Monday sets the initial high and low for the week. And in some cases, we can have trading opportunities on this day, depending on how that ties in with the other ensuing days, the template, the overall template. We won't get into day count or anything else, but we're just going to talk about first red day and understanding how a best trade setup will set up. So we have our Monday. We had a first red day on the NASDAQ. We also had first red day on the DJ30, and we also had first red day on the S&P. Now, in terms of understanding, coming back to my role, my primary objective is to identify the best setup in the session that I'm trading. So I don't just say I only trade the S&P and it's a first red day, so that's my trade today. I'm looking for the best setup out of these three indexes. Now, clearly, today we know that heading into the open of the U.S. window, which is the only time I trade these, so I don't trade them in London or Asia or anything else. If traders do choose to trade those opportunities when they present, that's entirely up to them. The same process applies for me. But coming into the first red day opportunity, heading into the New York Open, we had major news at 8:30 and at 10 a.m. New York time. We had ADP non-farm at 8:15, and ISM services at 10 a.m. Paint the importance of understanding what a clean first red day looks like. We have a pump at the end of the U.S. session, inside day. This is an inside day, and the market breaks out. It goes vertical. It breaks out of the high of Monday, the high of Friday, and reverses into the close. It closes below the open. Closes below the open. A peak formation that takes out the high of the week and closes below the open. This is a textbook first red day. Now, the opportunity then that I'm looking for is a sell high, high of session, high of day opportunity in the New York window. And that's as simple as that. So this, if you recognize this pump up, lower high, lower low, heading into our New York window from the London low, we haven't taken out the low of the day. This is a textbook setup. Because why? Because there are only two types of trades. pump and dumps and dump and pumps. And this is the setup, the lower high inside of a peak formation first red day pump up for the pump and dump heading into our New York session. Now, I also want to point out the importance again of understanding day 1, day 2, day 3, 3-day setups. This is a 3-day setup, first red day. We have a lower high, lower low for the pump and dump heading into our New York session. We had major red news at 8:15 a.m. and that market pumped up and broke down after the news. Heading into our New York Open now, we have our engulfment, the second 15 minutes into our second hour, and we have our entry heading into the New York Open. Our second set of major red news is at 10 a.m. So as I've mentioned to traders before, if I have an entry and it's 30 minutes before major red news and it's a clean setup, I will take the trade. But I will be out of the market before the major red news. And then, of course, my go-to setup to re-enter that is a first bounce or a first bar re-entry into the existing thesis. This is a first red day. I do not want to counter trend a first red day trade that completes the pattern. And why is that? Because it's probably not going to come back. Some traders may have positioned themselves on the large breakdown candle, but again, with the indexes, they open at 9:30 a.m. I will be happy to enter this pre-market with the underlying thesis that we've already had major red news and we have locked in the high of the session, the high of the U.S. session, with our underlying first red day thesis. Again, just targeting at a minimum potentially 2 full expansions of that range as a possible profit target. You will also notice that we have 1 full expansion of the range of our first red day. So again, coming back to classical geometric patterns, classical charting, Peter Brandt, we have a large rectangle, 150 pip rectangle by all accounts, and we have 1 full expansion that has just occurred of our first red day trade. Now comparing that to the DJ30, again, we have a market that broke higher before reversing in the New York Open, as opposed to a market that made a lower high and lower low for the pump and dump into our New York Open. The S&P, of course, it broke down. It stayed inside of our previous day's low and gave a sell high opportunity, not quite as lucrative as the NASDAQ setup. The NASDAQ was a textbook perfect setup, but the S&P still gave traders a high of session shorting opportunity after our first red day signal. A bit more volatility on the S&P as opposed to the NASDAQ. This is a 5-minute chart. So again, our major red news release, ISM services at 10 a.m. New York, is this large engulfing candle. So again, with the underlying thesis of a first red day, after the news is released, my go-to setup then becomes the pump and dump opportunity. This is a 1-minute chart. We get our pump up, our engulfment underneath our high bull, and then the breakdown back through the low of the third hour after the news for the first red day collapse. Now, just comparing that to some different first red days that we've seen this week, we had first red day on Monday on the Japanese yen. Again, the first red day opportunity is a high of day, high of session shorting opportunity if indeed it presents. And the thesis is that we have a market now that has gone from front side to backside, and now a market that was moving higher and has reversed. We are looking for the shorting opportunities after a market that has been making higher highs, pump day, higher highs, breakout, day 1, day 2, day 3, first red day, and then the sell high opportunity. Now, we had major red news again on that Tuesday. This market on the news completed the breakdown. No real clean first bounce opportunity. If we have day 1, day 2, and some traders were looking for day 3 breakouts. We had day 1 on Monday, shorts in the market, day 2 shorts in the market. They're looking to buy the low of the day in a broken down market. Now, we come down in the low of London, and of course, there's an opportunity where traders were looking to buy the low on a day 3 breakout. But I want to reinforce, we have a market that's breaking down first red day. It's currently broken out of our opening range. This market is in breakout. I would be more inclined to wait for a first green day before I would be looking to counter trend. If a market is in a trading range or in a making higher highs without breaking out, then I'm looking for the day 3 breakouts trade setup. So if you did take this, understand that you are trading against a broken down market. So before you get into your gap time, again, an explosive move, 25 pips roughly, that is going to be the extent of that trade. And the market breaks down, low-hanging fruit. Again, we had news, difficult for traders to get in prior to that. Had they got in, we could easily have seen a wick before this market broke down. We had first red day yesterday on the euro yen. And again, as I mentioned in the playbook, drawing the consolidations and understanding what that means. So we had our opening range breakout on Tuesday. Opening range, again on page 26, just reinforcing the importance of the opening range and understanding that, the initial balance. And then first red day, page 58. So the consolidation is what allows us to determine now how well this sets up. Again, coming back to our NASDAQ, we had a nice consolidation, but the market broke down and made a lower high and lower low. That is the key. Inside of breaking lows inside and a lower high, that gives me my boundaries now heading into the session. You want to understand when you have a first red day, because there are traders trying to go long at the low of the day, and they're buying into a broken down market, a first red day market. So this is where traders, they'll buy the market, and they're holding. And remember, my approach is to come to the market in the session that I'm trading to position myself in a best opportunity that is about to capitulate. I am not trying to buy lows and sell highs. That is not my objective. I am looking to position myself in markets that are about to collapse or explode. Now, difficult again, this is a euro yen 5 minutes. So we had our major red news on non-farm ADP. So again, our thesis is first red day. This market should be collapsing. We have another major news release, but the first bounce on the 5 minutes still gave traders a 25 pip move. We then had another continuation prior to the news at 10 a.m. The market breaks down on the news, pulls back, and we get another opportunity for a third level first bounce continuation into the end of our 3-hour window. So there are opportunities to still manage your risk and be conservative. We have 1-bar stops on all of these trades, but still taking 50 pips out. We have major red news out of the market, back in again with our underlying thesis that this is a first red day trade opportunity. Another variation on the Aussie dollar, we had first red day Tuesday. We had our big pump day on Monday. So we had a market that went vertical. We had major red news, Aussie dollar release on Tuesday, but we have a market that pumped up on Monday. So coming back to looking at the calendar and understanding, Monday, the Aussie dollar was a day 1 runner. No news release related to our day 1 runner, but we have major red news on Tuesday morning. So the question you want to be asking yourself is that, why would this be pumped up when there's nothing behind that fundamentally that shifted or changed heading into our RBA release on Tuesday? Hint, hint. So again, a reason to not counter trend a day 1 runner. This market is broken out. Traders are trying to short this because it's above the high of the day. Again, my purpose is not to try and sell the high and buy the low. I'm looking for specific setups. We have a market that breaks down. It breaks down on the news release, continues to break down throughout the session, low-hanging fruit in the U.S. Open. Again, a market that's about to collapse at the beginning of the session. In line with our broken down market on the inside, it closes as a first red day. First red day is a high of session, high of day shorting opportunity if indeed it does present. We had that in the Asian session. We had another little spike, 10:30 p.m. New York time. Reserve Bank governor spoke. We saw some manipulation. The market pushed back up into the breakdown from the Asian session on Tuesday before collapsing. We now have a broken down market heading into our Europe-London window for the continuation trade down through the low of the day. Now, when this market reverses in the gap time heading into our U.S. session, The first red day trade is now over. We're down near the low of the day. Traders are looking to short this because it was first red day. The trade is up here. It continues for low-hanging fruit in the Europe-London window, and now this market has potentially locked in the low of the day and may close back inside of Tuesday's low of the day. No idea, it doesn't matter, but I am not looking for a first red day trade up here after seeing the reversal in the gap time. The opportunity was for Asia and London markets, and we now see this market pulling back inside of the breakout. So initially we have a market that's broken out, currently back in range, but we had an excellent first red day opportunity in the Asia and London windows. So understanding what a textbook best trade setup looks like is key. And as we can see, this market continues to break down. The importance of not counter trending when you have a market that completes the pattern and starts to expand the range. This is where traders can get caught trying to buy the low, and they don't understand that this market has flipped on the inside and is now working its way back in the other direction, back into the traders who were long from Friday, pump day, inside day, breakout of the opening range that fails, giving us our first red day, and a sell high, high of session, high of day opportunity heading into our US window. This is a textbook best trade setup. Important to differentiate the opportunities that are available and how these markets will set up and the potential of the trade itself in the session that you're trading. So hopefully you got value from today's video, traders. An excellent opportunity for these markets. Again, we've had big moves every single day, and I think we're going to continue to see that. So focus on the cleanest, best trade setups. Keep it simple, keep it going, and keep it growing 1% better every single day. And may the markets go with you.